Hooty-hoo, all my stock market gamblers. Welcome, welcome. I'm Tall Mike. Today is Tuesday, November 10th. What we're going to talk about today is the stock market first, and then we're going to talk about how to protect yourself. How to protect yourself from all the money printing that's going on in the world. All right, so the stock market today, we have the Dow Jones up about 100. We have the NASDAQ down 200. So kind of a continuation from yesterday, but a lot more mellow. Not the big move that we had yesterday. We had that big 1,500 point move, drop down to 800 points, and now we're bouncing 100, 200 points back up. All right, so that's what's going on in the stock market. But what I want to talk to you today about is how to protect yourself. How to protect yourself from our government leaders, the ones that go out and print money. Now let's think about this. If me and you go out and print money, we go to jail. They go out and print money, no problem. But we all know, well, we should know, that they're actually stealing money from you. They're actually taking money out of your pocket every time they print more money. Because when they print money, the money in your pocket becomes less and less and less. They're actually stealing money from you, for lack of a better word. And you really have to protect yourself from this. You really do. Now, there is a ratio. There's a ratio. It's called debt, the amount of debt we have in the U.S., to the GDP. Now, right now, let's call it 27 trillion. We're quickly heading to 28 trillion in national debt. Now, this doesn't take into account the $6 trillion that's on the Federal Reserve's balance sheet. It doesn't take into account our unfunded liabilities. Now, our unfunded liabilities are actually up around $100 trillion. Let's just talk about two of them. All right, so we got Social Security. You think that they have money in there to pay everybody out? No, it's unfunded. It's a liability that they owe, but they spent the money already. They don't have that money. They owe that money, and basically the amount of that unfunded liability running about $20 trillion right now. Now let's talk about Medicare. Medicare is underfunded. They don't have the money to pay for the Medicare, for your health care when you get to be 65 years old. There's millions of people over 65 and they get Medicare, right? Well, the government doesn't have the money to pay it. It's an unfunded liability. It's $32 trillion. Now, what do they do to fund it? Well, they print more money. They print more money. They print more money. Now, what we're seeing just in the last day or two is that interest rates are starting to go back up. They're starting to go higher. What happens if they normalize and they go back to 5 or 6%? Well, then the government, they're going to default because, actually they won't default. They'll just keep printing money. But they have to print more and more and more just to pay the interest payments on the debt, on the $27 trillion. So we have a big problem. We got that $27 trillion. We got the $6 trillion in the Fed, and we got about $100 trillion in unfunded liabilities. So we know they're going to print more money. We know they have to. They don't really have a choice. I mean, they could default, but the U.S. doesn't default. We have a printing press. We can just print the money. So what happens when they print the money? Well, it takes the money out of your pocket. They steal it from you and me. They steal it from us. They take our money. Our money has less and less and less purchasing power. Now, you have to protect yourself against this. You just really have to protect yourself. You can't fight them. You can't vote against it. What president can you vote for that says we're never going to print another dollar? We're not going to print anymore. No, they can't win an election saying that. It's impossible. They got to say, we're going to give you free stuff. We're going to give you stimulus. We're going to give you free money. We're going to give you bonuses on your unemployment. They're going to print that money. They don't have that money to give you. They don't have that money to send out. You have to protect yourself. Now, how do we do this? This is why I tell people, I tell people you need to buy gold, you need to buy silver, and Bitcoin's okay also, but these will protect yourself. Now, what I want to talk a little bit about today is the difference between buying gold. Now this is a physical, it's American Eagle, it's U.S. printed, U.S. money, never going to be worthless. This is 1 ounce of gold. Okay, now 1 ounce of gold today trades for, let's just call it $1,900, right around $1,900 today. All right, maybe a little less today, actually maybe $1,890. But all right, this is fine, right? This will protect you. Now, I know a lot of the young people, the millennials, they love Bitcoin. Now, I can't show you a Bitcoin because no one's ever seen one, actually. But anyways, there's nothing wrong with Bitcoin, but there's a ratio between gold to Bitcoin. Now, right now, Bitcoin, we'll use this invisible one over here, Bitcoin, it's trading around $15,000. Okay, now this is trading around $1,900. So it takes about 8 of these to buy one of these over here. This, well, it's here. You can't really see it. I'll hold my fingers like that. To buy one of these Bitcoin it takes about 8 of these. Now I'm an old guy. Okay, I'm an old guy. I'd rather have 8 of these than one of these. Now nothing wrong with this. Nothing wrong with this. Now just last year, this invisible one, the Bitcoin, it was trading at $3,000, and this was, let's say it was up around, $1,500, right? So it took about 5 of these Bitcoins to get one of these. Now at that ratio, 5 to 1 Bitcoin to buy 1 gold, I'd rather have the Bitcoin, to be honest with you. I like Bitcoin. I mean, it's, you know what it's really good for? I don't think it's a replacement for gold, but what I do think it's good for is portable wealth. Portable wealth. Let's say you want to leave the country. You have to declare this. They ask you, do you have any over $2,000 on you? They can search, and this is over $2,000, okay? They ask that question when you travel country to country. But Bitcoin, it's invisible. It's invisible. You can move it from country to country without them seeing it. It's portable wealth. And I really like that feature about Bitcoin. That's one of the big pluses that I see for Bitcoin. Portable wealth. All right? Gold is physical wealth. Physical. You can hold it. You can touch it. You can feel it. Okay. So right now, it takes about 8 of these to buy one of these. Now, I'm going to go with 8 of these. I want to hold 8 of these instead of one of these invisible Bitcoins. But if Bitcoin gets over 10 to 1, let's say Bitcoin goes to 20,000 and this is still at 2,000, then it takes 10 of these to buy 1 Bitcoin. I'm saying go into gold. But maybe Bitcoin pulls back. Maybe it pulls all the way back to 2, 3, 4, 5,000. Then you got to consider the Bitcoin again. See, there's a ratio between things. And now the ratio, the reason we got to protect ourselves in the first place is the ratio of our debt. Now, what we have is 27 trillion in debt, and we have a GDP, a gross domestic product, that we do for the whole year in the U.S., around 20 trillion. So 27 trillion of debt, 20 trillion of GDP. Now that's approximately 130% right now. 130% of GDP. Now, most countries, I would say any country is broke at 100% level or extended above that because we are the reserve currency and we can print money and we're known as the reserve currency around the world. Now, if we lose that reserve currency, game over. Game over. But look at that ratio between our debt, 130% of GDP. GDP is at 20 trillion. Our debt is at 27 trillion. Now, how does this play out over time? Let's look back. In 1980, the debt to GDP ratio was only 35%. We're at 130% now. 35% in 1980. 130% right now. Now in 1980, we're at 35%. Now in the year 2000, we were at 55%. Now 35% and 55% of GDP is a manageable debt. That's very manageable. Well, when you get up here to 130% of GDP, and that's just your debt, that's not your unfunded liabilities, you're going to have a problem, and the problem's going to explode on you. And that's why you have to protect yourself. This is what I buy. I buy gold, I buy silver, and I even buy Bitcoin when Bitcoin's cheap enough. Now, Bitcoin right now, I think it's starting to get expensive again. I think that you got to be a little cautious in your Bitcoin play right now. Now, I know a lot of people, they say, and I'm crazy when I say be cautious with Bitcoin. It's the best performing asset that we've had in the last 10 years. It's outperformed anything. Probably outperformed anything this year. It's up by, I don't know, over 100%, I'm sure already. And, you know, it was just at a $3,000 low last year, and we're back up to $15,000. That's 5 times already. Okay, right now, I'm buying gold. Gold at 1900. I think it's just bargain. I think it's a bargain. I started buying these back when they were at $400. And that was, you know, back around the year 2000, that's called. So about 20 years ago, these were at 4,400. And they were at about, let's say, 2,000 now. It's 5 times. They've gone up 5 times. You need to get some of this. This is actually a better bargain today at 1900 than when I was buying it at 400 20 years ago, because we didn't have this debt problem. You see, 20 years ago, we were at a 55% debt to GDP. So buying, you know, gold at $400 an ounce was a smart thing to do. It did go up 5 times already, but buying it at 1900 when we have this huge problem of debt to GDP being 130%. Something's going to happen. I don't want to say what, because I don't know what. Maybe we'll inflate our way out of this debt and have hyperinflation. I don't know how it ends. I just know it's bad. And I know if we have hyperinflation, this is going to go to 5,000, 10,000, 20,000. Crazy, right? Get some gold, get some silver. Even Bitcoin's okay. That's all I got for you today. If you like this conversation, you know, hit the like button. Hit the like button. You know, give me a like. Why not? If you really like it, hit the subscribe button so we can talk more. Me and you. There's nobody else watching this. It's just me and you. So hit that subscribe button, and we'll talk more again tomorrow. I'm Tall Mike. Get out there. Do some trading today. I'll talk to you again tomorrow. Bye-bye.